Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can write to us on the WhatsApp number that will be flashing on your screen. Do remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well. And if you're already invested in a stock, mention the buy price, the quantity, as well as the time horizon. In that way, our experts will be able to help you better. And talking about our experts, today we have Kunal Bothra, who's joining us on the technicals, while on the fundamentals, we have Avinash Gorakshakar joining us. Very good morning to you, Kunal, as well as Avinash. Thank you so much for joining us on another edition of Buy Now, Sell Now. And let me start taking the queries then. And the first query that I have is coming from Geeta. She's writing to us from Dubai. And Kunal, this one is for you. She wants to know whether it's a good time to buy CMS Info Systems right now for a medium to long term.
So I think the stock has done reasonably well. Even in the last 2-3 months, it's risen up from 380 to 500. Very recently, the stock in the last 1 or 2 weeks has gone through a 5%, 10% kind of a correction. So from 500 odd highs, the stock has come back towards 460, 470 mark. So which means at current level, this could be a decent bet. The chart history is restricted. I think just 2 years or 1.5 years of chart history. For CMS Info. So we won't be able to project really on the longer term basis. But so far, looking at the trend shaping up for the stock from the recent highs, the volumes building up for the stock and the consistency of price making new highs after a phase of correction, I think it's a good price where you can look to start buying if you are looking at it from a medium to long term play.
Alright, then moving on to the next query. And Avinash, a very good morning. And the first query that I have is coming from Hamsa. She is a long-term investor and she is already invested in BEIL. She's holding over 600 shares, buy price is 220 rupees. But at this price point, can she go ahead and add more of this counter?
Good morning, Shristi. I think clearly, the investor has entered Bharat Electronics at a very attractive level. I would suggest that, at around 290, 300 odd levels could be a good entry point. We have a fair value of around 350, 360 in the next 6 to 12 months. And I think looking at the kind of order book, looking at the kind of, flavor for defense stocks, it's quite obvious that in the coming budget also, we could see some good big announcements from the government. So I would say that, keep a time frame of at least 12 to 18 months. One could expect a decent amount of re-rating here, even from the current level. But I think a buying price could be around 290, 300. Let the market, give a decent correction to this stock. And then I think the entry point could give a better risk reward.
This next one also is coming to you, Avinash. This is from Shrishti's namesake. This one is from Shrishti, who is a student writing to us all the way from Bangalore. And she wants to know about lxigo, which one, this company that just got listed this week. She already got it at an IPO price around 93 rupees per share, about 161 shares of lxigo in her portfolio. She wants to know whether she should go ahead and book profits already in this one or look to wait and stay put with this for the next 2 years, Avinash.
No, I think she's been lucky enough to get, the shares in the IPO. So I think she should hold on. There's no need to hurry. I think my sense is that let the company's first quarter performance come out. See, this is a platform business and where the scalability potential is quite huge. So I think over the next, say, 12 to 18 months, the runway seems to be very solid. Once the numbers come in, once, we get a little bit of more management commentary, I think the stock could get further re-rated. So I think continue to hold. There's no need to book profits as of now.
All right, moving on to the next query. And Avinash, once again coming to you because this one is from the cash segment and I'm not sure whether you track this one. Radiant Cash Management Systems, Jay Devappa is already holding 1500 shares and his average price is 85 rupees. Any view on this particular stock? It's quite near to his buy price, but should he continue to hold on?
See, I think if he's a long-term investor, I think he can hold on. But unfortunately, this is a peer to CMS, info, which I think Kunal recently commented. They are in the cash management system. And basically, last 2 quarters, numbers have not been all that encouraging. And that's why, the stock is available below its IPO price. Unless the investor has got a 12 to 18-month time frame, there is no point in hanging around here. I think a better choice, according to me, would be IDFC First Bank, which is available around the same price. And I think Switch could give a decent risk reward if the horizon is at least 12 to 15 months.
This one is coming from N. Lakshmi, who's, N. Lakshmi's query would be for the money show. That's why we will take queries regarding your mutual fund and then advise where you should invest and which mutual fund would be the right one for you. But let me take this one. Is coming in from Praveen, who's writing to us from Kerala. Kunal, this one is for you. Purchase 60 shares of KPIT Tech at price of 1,525 rupees per share, as well as ITC at a price of 426 rupees per share. Any short-term targets that you can suggest for these counters, and also any agro-based stock that you're liking right now?
So for ITC as well as KPIT Tech, I would believe that both the charts are poised up pretty well. KPIT Tech specifically, I think we were discussing this last week or the week prior to that, that the IT stocks are bound to get into a turnaround phase, and we've seen a fantastic turnaround so far for many of the IT names. I would probably believe that KPIT Tech over the short term, and by short term I would probably mean that it's a time frame of at least 2 to 3 weeks, if not more. I would probably look out for a target somewhere in the range of 1720, 1750 approximately for KPIT Tech, and for ITC on the short term basis, I would actually wait out for a breakout above 440 mark. So what's been happening is that the stock over the last 2-3 months has been taking a pause at a resistance at this 440 odd levels, which I believe is acting as a hurdle. This also coincides with a 200 DMA for ITC. So let's see how the stock tends to break out, or when the stock breaks out of this 440 mark. That could really pull put the stock into a much more stronger momentum gear rather than what it is trading right now.
All right, Avinash, the next query is from Subramaniam from Chennai, and he wants to know the future prospects of two counters. Firstly is First Solution and the other one is Nelcast. He is sitting at a profits in the range of 20 to 55% in both of these respectively. So do you believe that these are good counters to continue to hold on?
Yeah, I think, First Source is one of the largest business process outsourcing units, belongs to the Goenka Group, and Nelcast is a very significant, auto ancillary which caters to the tractor and basically commercial vehicle segments. In fact, Nelcast is one of the few players which make cylinder blocks, and they have a complete, market dominance here. If the investor has a time frame of at least 12 to 18 months, because I believe this commercial vehicle sector should do well, as the economy progresses. And the business processing outfit, which you mentioned, First Source Solutions, has also got a decent order book, has got several marquee MNC customers as well as domestic customers. So I think unless he's in need of funds, I don't think he should book out profits. He should continue to hold at least for the next 12 to 15 months.
From Swati, she's writing to us from Kerala. Kunal, this one's for you. She's holding Timken India. She's not told us the buy price on this particular counter, but she wants to know, are the charts good enough that she can continue to hold on to this counter, or would you advise her to exit?
No, I think it's a good chart to hold on to. The stock has given two types of breakout. One of them is on the longer term basis, ending almost 1.5 years of consolidation, about 3,500 mark. And the recent one was when the stock had broken past about the 200-day moving average. That was around the 3,200 to 50 levels for Timken India. So I think on both of the front, it looks attractive. I think you should continue to hold on.
Okay, this one is coming from Mr. K. Parthasarthi, who is the senior citizen. He is from Chennai. He wants to know some technical levels on newly listed counter, which Kunal, I believe you will not be able to help, given the fact that the chart history will be very limited. I will take this query to you actually, Avinash. Indegene as well as Go Digit are the counters that he has in his portfolio. He already has them in his portfolio. About 33 shares of Indegene as well as Go Digit, about 55 shares. What's your take on these counters? Do you think they are worth staying put with?
Yeah, I think, Cheryl, if the investor has a 2-year kind of time frame, then I think both the companies selected are very solid companies. In fact, GoDigit recently came out with its financial numbers, very solid numbers, and the traction is expected to get better in FY25. And as far as Indegene is concerned, I think it's a company which is operating in the life sciences space, very solid business model, very good marquee clients, and very strong revenue visibility. So, unless the investor has a 2-year plus horizon, it's unlikely that he would make a lot of money here, because markets have already factored in the earnings growth in the price as of now. So near term, the stocks may remain range bound for both the companies, but over the next, say, 2 years and above, I think you could definitely get a very decent risk reward.
Coming right back to you once again then, Avinash, Kaushik Mitra wants to know, for a fresh entry, fundamentally, does it make sense to enter Power Grid or Power Finance?
I think my guess is that both these stocks have jumped quite significantly. Power has been a sector which is under stress, a lot of flavor. So I would say is that unless he wants to get into Power Grid, it's better that he waits for a mild correction. The budget is also expected to announce a lot of concessions and new policy changes for the power sector. So I think it's better to wait. rather than buying at the current level, maybe a mild correction could be a good opportunity to acquire.
Welcome back. You're watching Buy Now Sell Now on ET Now, and now for the next half an hour, I have Somit joining me on the show. Very good morning to you, Somit.
Good morning.
And let's continue taking a query with our experts. Kunal Bothra as well as Avinash Gorakshakar are our experts for today. Let me continue taking the queries then. This one is coming from Ravi Shankar, who wants to know about Hindustan Zinc, if it is a good buy for the long term. And I believe when actually Ravi Shankar wrote this query to us, we had the flash on the bottom of the screen on Hindustan Zinc in an MOU with a US-based company in order for exploring zinc batteries actually. That was the new spec for that. But Avinash, what's your take for the longer term? A good bet fundamentally, Hindustan Zinc to enter right now?
I think, Cheryl, if the investor has at least the next 18 to 24 months, because this is a commodity business. Most importantly, the biggest highlight for Hindustan Zinc is that it's debt free, has a lot of cash on the books, and now post the restructuring of Vedanta, this will be a part of Vedanta. So, unlike all the other companies where shareholders will get separate shares of each of the companies, Hindustan Zinc is going to be part of Vedanta. So my sense is that if the investor has a long-term horizon, then I think he could definitely try accumulating this in an SIP mode. Any correction here could be a good opportunity to accumulate.
It's from Rahul Sharma from Chandigarh, and it's on Oriana Power. Have you tracked this, Avinash, this counter Oriana Power?
Yeah, we do track it.
Has around 600 shares, and he's saying that the stock is already 5x for him. So should he continue to hold this stock for a longer period? Is there more upside?
Yeah, Somit, the upside definitely is there, but most of these SME companies, where the upside is almost 5 times, 10 times, I think it makes sense to take out your capital and make the rest of your investment free. So I think my suggestion would be that at least book out that much quantity of shares which he holds and recover his capital, and the rest of the shares can be free. I think the next 12 to 18 months are going to be solid. The company is sitting on a very healthy order book, and the runway for growth is very solid. The most important thing is, apart from solar panels, now they would be obviously generating power from solar. So that is an opportunity where I think, even in the coming budget, some fiscal benefits also would come in. So I think book out, some of the shares, and rest of the quantity can be held on for the next 12, 18 months.
Coming next to you, this one is from Veni, who is a senior citizen writing to us from Hyderabad and wants to know whether it makes sense to purchase Adani Ports and Power right now. And if yes, then what's the right entry price and medium-term target for these counters? And if you look at both of these counters, they have actually given up or rather recovered all of their losses that they had posted post the Hindenburg report. What's your take? Do you think now it makes sense to go ahead and invest in these counters?
Well, yeah, I think these stocks have recovered quite well, but I'm not sure whether these are good prices to try and buy these stocks, because there's hardly any major phase of correction. The concern for Adani Ports specifically is that the stock has not recovered the election day sell-off for itself, and that too at a point when the indices have done that already. So which means that the stock has already seen some underperformance creeping into the stock price. Now, if the underperformance streak continues for say another 2 to 3 weeks, you might probably see these stocks going to a phase of correction, or at least some bit of sluggishness. Same is the case with Adani Power. The stock is in fact very close to the closing lows for itself, which was seen on the election day itself. So I would probably believe that both these stocks are showing some sort of short-term weakness. I'm just worried that it may not engulf into a medium-term to long-term weakness. So that's why I would refrain to buy the stock at, or recommend a buy at current levels.
Also, let's not forget that today you will have the BSE rejig, BSE Sensex rejig take place. So you are likely to see Adani Ports, which will see an inflow of about $259 million on back of the rejig, and you will see some outflows come in. Actually, for Wipro, the outflow will be about 170 million. I beg your pardon, Adani Ports I meant. Adani Ports may see an inflow of funds, while Wipro may see an outflow of funds. Isn't that, Somit?
Well, yes, around 260 to $59 million, because it's getting included in the Sensex, and that will be effective from June 24, that is Monday. But inflows will come in today, and in the last half an hour is what is expected.
Half an hour, all right.
Well, moving on, the next query is from Tushar from Delhi, and he wants to know whether at current levels should one invest in Tata Communications for long term, and also he's holding a few shares of PTC Industries. Should he continue to hold this? Avinash, what would be your advice for both these counters, Tata Communications and PTC Industries?
If he has a time frame of at least 2 years plus, Somit, then I think both these companies qualify as good portfolio stocks. As far as PTC Industries is concerned, it's a very well-established player for the defense space, and there are a lot of marquee investors who have now recently invested in their preferential issue. So I think, despite the fact that the stock has multiplied significantly, if you have a 2-year plus horizon, one could expect some further re-rating here. Defense is a market which I think can grow significantly, and we could expect some announcement in the budget also. And as far as Tata Communications is concerned, it's an again unique telecom player. So my sense is again a 2-year plus view can definitely yield a good risk reward.
All right, this next one is coming in from Venkati, who's writing to us from Vishakhapatnam, who's a senior citizen, 62 years old. He's a long-term investor as well, Kunal, but he's been holding Lxi Organics, about 300 shares in his portfolio at an average price of 398 rupees per share. He's been holding this counter for the last 4 years. He's suffering a loss in this one now. So he wants to know, what should he do? Should he average, exit, or hold on to this counter? If you advise average, then at what price?
I would just suggest to hold on to the stock because there is nothing major which has changed into the stock. It's still taking resistance at the 200-day moving average for the last 5 months. Now, the only change which has happened for the stock is that there is some positive movement, I would say, which has come back into the indicators on the weekly charts for Lxi Organic, and that generally indicates that maybe you might see the stock getting into a breakout mode. So we'll just wait out for maybe another couple of weeks if the breakout sustains for the stock, and assumingly if it moves towards even the 280 to 300 levels over the next 2 weeks, then we can probably expect that the stock could start getting into a trending nature. So maybe buying at higher levels could be a better strategy, but I think you'll have to wait out for that signal to come by maybe over the next couple of weeks or so.
The next query is from Shri Kishore Sharma from Bihar, and he wants to know whether should he hold Azad Engineering, which he has already bought around 20 odd shares at a price of 2,000 rupees for the next 3 years. Avinash, have you tracked this counter, Azad Engineering?
Yeah, I think, see, if the investor has a medium to long-term view, Somit, again, this is one of those companies which has got a very healthy order book, very strong marquee clients. And I think despite the fact that, his cost price is slightly higher, if he gives in a time frame of at least 18 to 24 months, then the runway for growth for this company is extremely strong. So I think, it's a matter of time and patience. I think as the numbers come out for FY25, you could see a decent amount of re-rating here. So I would say that continue to hold, but keep a time frame of at least 2 years.
All right, on that note, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue to take your queries. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your queries then. And Kunal, this one is coming for you from Aditya, who's writing to us from Hyderabad. And he wants to know if it's a good time to buy Granules India for the short term. His short term is 1 month. He's saying the stock has already hit an all-time high on an intraday basis. Is it advisable at this elevated price to go ahead and buy Granules?
See, you'll have to buy in stages because this stock has a tendency of getting into a breakout, and all of a sudden you see the stock getting into a mild retracement for itself. We've seen this multiple times for Granules, whether it's in March 2024, where the stock has shown a similar kind of a price volume breakout, and then immediately post that the stock had shown a bit of correction. And even very recently also, the stock at the start of this month had gone back into a breakout above the 480 levels, retraced back towards 455, 460 mark, and now it's broken past about this 480 barrier. So which means that if the same tendency repeats for Granules, you might probably be at a point where you may be caught buying the price at much higher levels. So I think that sense a strategy is to buy 50% of your expected quantity at current levels and then wait out for a phase of correction. So in case if it comes back to 460, 465, look to average further.
Well, the next query is from Venkat Ramani from Bangalore, and he's holding around 600 shares of G Power, bought at a price of 295 rupees per share. He wants to know whether should he hold, add or sell this counter. He can hold this counter for around 18 odd months, he's saying. Avinash, what would be your view here?
I think Somiti can hold on to the counter. I think he's got a decent margin of safety considering he's entered the stock pretty early. And I think the power sector, according to me, is going to offer a lot of opportunity for companies over the next, say, 2 to 3 years. And plus, the government is also encouraging, the power sector. So my sense is that, rather than now adding the stock at these elevated levels, it's better that he holds on for the next 12 to 18 months. He could expect a further decent risk reward from these levels.
Right. This one is coming in from Korean, who is a senior citizen. Cochin Shipyard is what he's holding. Sorry, I beg your pardon. He's writing to us from Cochin. Apologies on that front. He's holding 100 shares of Poonawalla Fincorp at an average price of around 462 rupees per share. He's been holding it for almost a year, Kunal. He's saying that the stock has been seeing some sort of a decline over the last few weeks, and there you go, 6 months, it's seen a decline of about 5% or so. Should he hold for another year or book losses? Do you think it's too early to book losses for Poonawalla?
I think it's too early. I think it's a quality stock, but on the technical front specifically, I think closer to that 500 levels, there is some sort of supply which is coming back into the stock, or some selling pressure which originates whenever the stock comes back into that 500 levels in terms of a breakout, which means potentially that the stock would get into at least a 3 to 6 months of price cool off or consolidation. So I think in that sense you should continue to hold on, and I would probably expect that over the next 3 to 6 months you might probably see one more round of a breakout coming back into the stock about that 500 level. So I would suggest a hold.
Next query is from Anusha from Karnataka, and she wants to know whether is it a good time to buy Marksans Pharma at current prices. Kunal, what would be your view on charts when it comes to Marksans Pharma?
I think it's an attractive stock placed at 160-64 levels, which is the previous swing support for Marksans. The breakout for the stock is around the 180 mark. So I think the risk reward is attractive for you to buy the stock at current levels. Even if it's a short term kind of a play, you can look out for targets at least at a 180. But if that 180 level gets taken out, which means that the medium to long term charts open up quite well for Marksans Pharma. So I think any which ways the risk reward is very much positive. You can look to enter the stock at current levels.
Alright, Kunal, the next query that I have is coming in from Karishma, who's writing to us from Delhi, and I know you track silver. She wants to know how to buy silver, how to play silver theme. Is there some index that you buy in order to play silver? And also wants to know if there is any pharma stock where she can look to put in fresh investments.
So I think silver ETF is something which you can. I think if I'm not wrong, it's something which you can probably look to invest into. Of course, the best option is to try and go for the silver as an asset class or hard commodity over there. So I think in that sense, these are the two ways in which I am aware you can look to buy silver. But my sense is that we are now heading into a point where many of the bullion asset classes are getting back after a mild correction phase into a second or a third round of a breakout for themselves. So which means that potentially for the next 3 months to maybe say 9 months or so, we could be looking at a much more stronger upside for many of these bullion asset classes, including silver.
The next query is from Kanak Kothari from Ahmedabad, and he wants to know whether should he continue to hold or sell these counters. It's Ramco Industries, Sandhar Technologies and 20 microns. Avinash, have you tracked all the three counters?
Yeah, I think, Somit, all the three companies are fundamentally quite strong. Ramco Industry is part of the Ramco group and largely is into asbestos sheets. 20 microns is into a specialty input which goes largely in the metal space. So I think here also the company has been doing remarkably well. So I think, unless the investor has a short-term requirement of funds, I think the next 12 to 15 months are going to be pretty solid. And Somit, which was the third stock? I forgot the name.
It was Ramco Industries, 20 microns, and just a minute, and Sandhar Technologies.
Yeah, Sandhar Technologies is a very interesting bet. It's an auto ancillary and largely covers, the two-wheeler market. And now they have made a very big entry in the electric vehicle market. So I think here also, I think the traction in the order book and the business performance is going to be pretty solid. So I think Sandhar also can be held on. Keep a time frame of at least 12 to 15 months.
Okay, the next query that I have is coming from Mr. Singh Kunal. He's writing to us from Pune. He wants a technical view on Gravita India. He's holding about 300 shares at a price of 661 rupees per share. What's your take coming in on Gravita India? How is this one looking to you on the charts? Isn't this one of those high beta plays?
So it used to be at one point of time a very high beta stock, but the nature of the stock price has changed dramatically over the last 2 years or 3 years. It's now almost at 1500 plus levels. In fact, the influx of volumes the stock had seen in the last 1 month is exceptional, and that itself indicates that there's been new trend shaping up for the stock. I would believe that it's a good stock to hold on to. What you can ideally do in this kind of a scenario after this strong 1 month up move of 40-45% so far for Gravita is you might have to trail your stop losses higher since you bought at much higher levels. If you're looking out for maybe a short to medium term targets, then I would probably place say 1650, 1700 as a target range for Gravita. But for that, you may have to probably trail your stop losses to 1200, 1250 mark.
The next query is from Satya, and he wants to know the next 1 to 2 years view when it comes to PNB Housing and V-Guard. He's holding both these counters for the last 3 months, and he wants to know the next 1 to 2 years view. Avinash, what would be your view for PNB Housing and VCard?
I think both these companies, Amit, if you have a longer term view, I think business traction has been pretty solid. In fact, there have been some reports that PNB Housing, there could be some divestment in the equity holding structure, and some strategic and large, institutional or HNI investors could come in. My sense is that this is definitely one of the larger housing finance companies, is a subsidiary of Punjab National Bank. And housing finance market, the way things are going, I think should get better. The government has already announced 3 crore free houses under the PM Awas Yojana scheme. So this also factor should benefit the company. And the other company, I believe it is V-Mart, that also should do well considering the kind of opportunity in the retail space. So keep a long-term time frame here.
This next one is coming in from Santosh. He's writing to us from Trichur, wants to know whether he should hold or look to exit HDFC Bank. He's not given a buy price for this counter. Kunal, does this, is sell even an option right now for HDFC Bank? Because hopefully, like what everyone is saying, hopefully the momentum is back in this counter.
Well, I don't see any reason why you should be selling HDFC Bank. I think you should definitely look to hold on to the stock. And it's a phase of the market where I think migrating and coming back towards the quality stocks and the larger cap names would probably make a lot of sense, because we're already seeing some sort of froth building up into certain pockets of mid caps and small caps. So I think in that sense, stocks like HDFC Bank, which have been very formidable and still not given a breakout. So it's not as if that these stocks have run up exceedingly high and then you're entering these stocks at much higher levels, or you're trying to exit the stock at a overbought kind of a territory for themselves. So I think in that sense, I would suggest to hold HDFC Bank.
All right, with that, let's kickstart with the rapid fire then. The first one coming in from Sunny, who's writing to us from Mumbai. He wants a fundamental view coming in for Tata Tech. Can he look to buy at current price and hold for the next 12 months? What's your take coming in on this, Avinash?
Yeah, I think he can definitely think of buying the stock, but I think he needs to keep a time frame of at least 2 years, because in the very near term, the stock movement may remain a little moderate. But longer term, yes, I think he could definitely expect a very decent risk.
Next query is from Tibrewal from Kolkata, and he wants to know, Kunal, your view on Jai Corp and Minda Corp.
So I think both the charts are doing pretty okay for themselves. I would suggest a hold.
Kunal, this one is coming from Raja. He wants to know about Delta Corp. He has 500 shares at a price of 139 rupees per share. Wants to know hold or sell. Sorry, this one is coming from Seema.
Hold, but keep a trailing stop loss closer to 130.
The next query is from V. Murli from Bangalore. He's incurring currently a huge loss when it comes to Symphony, and he wants to know whether should he continue to hold this counter or sell. Avinash, what would be your view?
No, I think Symphony is one of the larger players in the air cooler space, and I think looking at the kind of temperature levels now, all air conditioner and cooler companies should do quite well. I think keeping a long-term time frame, I think at least 12 to 18 months, I think the investor should hold on. It's a well-managed company, but he needs to give in some more time.
Alright, this one is coming from Padma Siva Rao from Bangalore. Religare Enterprises, 85 shares at a price of 234 rupees per share. Kunal can hold for 1 more year to get some more gains?
Definitely yes.
The next query is from Jaya from Bangalore. She's having shares in Hindustan Aeronautics and Hudco. Should she continue to remain invested for long-term or book out profits? Avinash, what would be your view here?
Yeah, I think both the stocks, Swamit, can be held on. Hudco as well as Hindustan Aeronautics continue to enjoy a very strong business model, very strong order book. So I think continue to hold.
Kunal, City Union Bank at current price, does it make sense for Bhuvana to go and buy for the next 1 year?
Yeah, I think it's a good price to buy the stock.
Next query is from Kabir Bedi from Punjab. He's holding 5,000 shares of Delta Corp at a price of 110 rupees per share. He wants to know whether should he continue to hold this counter for the next 2 months. Kunal, how's the chart looking?
Looks quite okay. The stock has broken past about the 200 moving average, so maybe some sort of optimism building up. Would suggest a hold.
Alright, and with that we come to the end of the rapid fire. Thank you so much, Kunal, as well as Avinash, for joining us on the show. Thank you, Kunal, for the Pachala, as well as taking and resolving all of our stock related queries.
If you like this video, then like, share and subscribe to ET Now.